Welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at exactly what's happened with the Bitcoin price after the ETF decision on Wednesday. And I'm going to put that in the context of the 4-year cycle, the 60-day cycle, and look at the medium-term outlook to see exactly what's happening to actually put the Bitcoin ETF decision into perspective. I'll also be having a look at the wider markets in terms of exactly what the background is so that we can make sense of what's going to happen with the Bitcoin price over the coming weeks and months. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. And there is only one place to start, and that is obviously the decision by the SEC to approve the spot Bitcoin ETFs. So we had a look at many narratives exactly of what may happen after that decision has been made. And what's really happened after that decision is that we've now got these headlines here that there's been a $5 billion dump by the speculators and the Bitcoin price sell-offs after the ETF approval, and questions are being asked, have investors turned bearish? And will Bitcoin keep dropping? Okay, I'm going to have a look at the actual decisions of the ETF that came about on Wednesday and the scenarios that I gave in the last week's video of what would possibly happen. So I'm going to compare what's happened currently with the Bitcoin price in comparison to what happened with the gold ETF back in November 2004, and to make head or tail of what is possibly likely to happen going forward. This yellow vertical line, as you can see, is the day of the ETF approval for both gold down here and for Bitcoin last Wednesday up here. One thing of note here is the correlation of Bitcoin, that up to the actual ETF decision here, gold was exactly the same. It was following an upward trajectory in anticipation of the ETF approval. So far, so good. The slight difference is that as Bitcoin came up here, it actually consolidated in this range prior to the ETF decision here, whereas gold continued its upward trajectory without the consolidation. So there was this anticipation and expectation that just like gold over here, it wouldn't be a sell the news event, because with gold it just kept on going until a little bit later, and then the sell-off came. It was well within the consolidation range. But Bitcoin has actually decoupled from that narrative, and that is that after the ETF decision, yes, we had a little bit of a surge up to the 49,000, but then the sell-off came here, and we've taken out the previous candles here and over here and over here. So it's very obvious that there is actually a weakening of this trend that we had up here. And many people think this is a market manipulation going on in the background. And while that is obviously possibly true, and it does go on a lot with most of the assets, not just in the crypto space, but more so in the crypto space. However, if you look at the volume, you can see quite clearly that the sell-off volume after the ETF here has been really high when you compare it to the previous volumes here leading up to it. So there has been a substantial sell-off. And if we move the chart to the left, and while in the short term there may not be a correlation between the Bitcoin ETF and the gold ETF, once we'd got this range that we've created here with gold, for nearly a year this went on within this consolidated range, and then once it broke out, we've never really looked back. So in less than 2 years, this had a massive break up. So this is the kind of trajectory I would expect Bitcoin to follow. I'm not sure that we're going to get this long consolidation for over a year. It may well be the case, but we are following a 4-year cycle with Bitcoin. While there may well be a consolidation up to the halving and a little bit after that, I would expect the trajectory to start moving sharply to the upside towards the end of this year. So I'm going to try and make head or tail of exactly what's happened post the ETF decision. So as I've shown you in the last few weeks, that the Fibonacci levels are basically these levels here. If you take the Fibonacci from the top at 69,000 to the 15.4 here, then this was a very strong level at the 61.8 Fibonacci level. And that was between 48 and 50,000. And that's exactly what's actually happened. The other level just above it was the 78.6, which was correlating with our pi cycle at around about the 60,000. So these were the levels I've been giving you over the last few weeks. And so far, as we can see here, we've actually topped out at 49,000. And we know from the narrative of the previous 3 cycles that the Bitcoin price has a high affinity to come back to the pi cycle before the halving. So the question now is, can we get to the pi cycle here, about 60,000, before the halving in April? Only time will tell, but we need to make head or tail of exactly what's happened here. I just want to analyze what's happened over here. The ETF narrative has been playing out from this region here, and since we've been following that ETF story, the price for Bitcoin has been steadily rising into this consolidation, which culminated in the decision up here on the following day, on Thursday, and then the big sell-off came. So it wasn't an immediate sell the news event, but after a minor surge up to the 61.8 level here, we've had the sell-off since then. But we're still holding strong on this level that I've been giving you for the last few weeks, the 40,000 support line here. So while we've had a sell the news event, it's still come back down well within and above the support level of 40,000. And the lowest we've come down so far to test that level is 41,444. And the question is, where does it go from here? Now, there are a lot of stories about exactly why this sell-off has come. Many are based on the actual ETFs themselves because they have a T+1 or T+2 or T+5, which is the time period they have to settle the accounts, which means that they don't have to buy the Bitcoin immediately after the ETF clients have actually come on board. So that could be a delay of about 1 to 2 days, maybe even 3 days. So it may well be still that on Tuesday, tomorrow, when the markets reopen again, because today is a holiday in the USA, but when they open tomorrow, we will then know whether the ETF managers are going to be buying up a lot of the Bitcoins whose demand was created after the ETF decision here. So we really have to wait for everything to settle down before we can make really head or tail of whether we're going to consolidate here or whether we're going to jump up at this point. Because everything is possible here, even breaking the $40,000 mark. So we're going to have a look at some of these levels down here as well as up here. If we were to break down at the $40,000 mark, there is a very strong neckline here at the 37,000, and further down we've got this neckline exactly at around about the 30 to 32,000. So these are your real support levels. And if you put a trend line from here, you can see quite clearly we haven't broken down below that trend line. So there is that support from the trend line as well. And that would suggest that we're going to bounce from the $40,000 mark here. And based on our historical perspective of the charts that I've been showing throughout the 2023 bull run that we've had, we know that the pi cycle here is where the price normally comes to before the halvings on these red vertical lines. So we can see in the first cycle here, we came up to the pi cycle. The second halving, we came up to it twice. The third halving, we came up to it one more time. We are now very, very close to it at 60,000 now. So the question is, before April, are we going to come up to it here? So that's the narrative that's now left. If the charts are true to the historical perspective, then we can expect the price still to come up to the 60,000 before the halving in April. And this is where the pi cycle is currently, at 60,400. And it may seem a long way off, but if you have a look at the move that we had down here in October, all the way for a month up to these levels, you can see there was a 41% increase within 1 month. And that didn't look possible at that time either. And currently, from where we are now at around about the $42,000 mark, it would be a similar move up to the pi cycle. So it is still very plausible that we hit the pi cycle before the halving. Of course, there are no guarantees. We're in the domain of probabilities and possibilities, not certainties and guarantees. And we can see exactly what happened at the 49,000. There was a lot of bets and a lot of people playing the leverage game. So we can see exactly what happened, that at 49,000, there were liquidations of over $80 million worth of leveraged Bitcoin positions. And that is why it's a dangerous game to play leverage. And this is one of the reasons why I would never take a leverage position. You really don't know what's going to happen, and why you have to take a 4-year view with the final 2 years coming up of this 4-year cycle. So I'm going to put this all into perspective now in terms of the medium-term outlook. Yes, we've had the 61.8 rejection over here. Yes, it's become a sell the news event. Yes, we've lost the support line at 46,000. And if we look at the daily chart, we've lost the 50 simple moving average over here for the last few days. And that's the first time we've gone below that since September 2023. So that was the last time we dipped below the 50. and we're just doing that now. But when you zoom out, you see a little bit of a different picture, and this is why we should always zoom out and get the overall perspective before you make any rash decisions. And that is that if you look at the weekly time frame and you zoom out on the price, you can see that this trend, which started here at 15,400, this trend here, we are now consolidating still within the top 1/3 of that trend, which is basically like a bull flag. And you would expect that to break to the upside on a longer term view. And if you look at the moving averages, on the weekly chart, we are still holding strong on the 21 simple moving average. We've not broken that since we got above it in October last year. So that is looking extremely bullish with the consolidation going on here. And that would obviously be a continuation pattern to the upside. So on the longer term time frame, this is looking incredibly bullish still. And the 200 simple moving average, the green line, we are well above that. And when we zoom out even further, we can see that this is where, once we've gone past it and we get into the bull market, then the trajectory is more to the upside here. So you can see quite clearly that the trajectory after the 200 simple moving average, we are still very bullish to the upside. And if you take the 4-year cycles view, we're well on track to get into the halving over here and then having a parabolic move. A similar thing happened in the second halving. We're moving straight into the halving and then the parabolic move. Straight into the halving, then the parabolic move. So we're going straight into the halving on an upward trajectory, and then we can expect the parabolic move here. So from the 4-year cycle perspective, everything is intact. And this is why the short-term oscillations shouldn't cause any anxiety to those with a longer-term view of the whole cycle. Even the 8 exponential moving average, the blue line here, we're holding firm support at the 40,000. So once again, most of the indicators are still showing very good support on the 4-year cycle. But going forward, now that the ETF story is out of the way, we can expect most of the action to take place according to the 4-year cycle. And as I mentioned many times in the past, the most important thing to look out for going forward now is the halving area here. If the price starts to move back up around the 69,000-70,000 at the time of the halving, then you're looking at a left translated cycle with a much higher probability, rather than if we get a pullback here, maybe down to these support levels anywhere around there, from 35 to 40,000, that would give us a different trajectory to the 4-year cycle. Then that would be the normal 4-year cycle, which we're expecting at the end of 2025. And all I would say is not to make up your mind as to the final figure that may come here. If you watch a lot of YouTube videos, you'll know that there are so many theories out there. Some are predicting the 5.3 theory as if it's definitely going to happen, and there is absolutely no way that it can be anything but the 5.3 theory. And that would take us to around about the same level here, between 70 and 75,000. And there are those who are saying it's going to be well past the 100 mark. And there are those with about 140, 150, 200, 500,000, 1 million. And obviously somebody's going to be right. We really don't know. And the biggest mistake people can make is to actually pick a narrative and expect the Bitcoin price to definitely hit that somewhere along the line, and just believe that that is the narrative that's going to play out. The main thing to look out for is the exit indicators that I've shown you many, many times before. If those exit indicators are coming up to a certain price, wherever that's going to be, from 75 all the way up to 500,000 or even 1 million, whenever those indicators are hitting, that's when the price is going to top out. And we mustn't get fixed into a particular narrative and expect the Bitcoin price to come up to your narrative. It's just not going to happen. It's always a more sensible view to keep a neutral and flexible and fluid approach to the market and let the charts make your decision. And one of our exit indicators is the Pi cycle, which in the past, in every single cycle so far, whenever the green line has crossed the red line, that is where the market has topped off in all of the previous cycles. So currently at the moment, you can see they're well apart. The higher line is at 60,000, the green line is at 36,000. And if you were to draw the trajectory here, just as a ballpark figure, that would suggest that we are going into this arena here in 2025, anywhere between the mid-2025 to the end of 2025. And obviously there's a lot of price action to be had over here. So we really don't know, but so far, if you just had to do a ballpark figure, that would be the actual trajectory all the way to around about the middle to the end of 2025. And only time will tell what will happen here. So always keep a neutral and open-minded approach to the whole thing. Otherwise, you're going to be driven by your narrative and make the wrong decisions accordingly. Okay, we've covered the 4-year cycle and we've covered the ETF decision in terms of what we can expect in the short term with all the levels and what have you, as well as in the medium to longer term. And before I get into the 60-day cycle, just want to cover the wider markets, exactly what's happening in the background where Bitcoin fits in. Okay, we're going to start off with the dollar, and it's quite clear that having topped out at 115, we've been watching this dollar trajectory go down, consolidate here, and then one more time making lower highs all along here. And we're currently in this downtrend. So I would expect this downtrend to continue for the next 12 to 18 months. And the target that we've had here is this level here, anywhere between 95 and 97. And you can see where the next move is going to be, because if you take the Fibonacci retracement from this previous high to the recent low, you can see we've topped out at the 61.8. So having made lower highs all along here, we made one more lower high, and the next point of destination in the short term is going to be this level here at around about 99. So just below the 100 level. This is where you'd expect a little bit of a bounce before coming back down to these levels. And if we have a look at the Russell 2000, we can see that there was a gap here, and we've come back down here and refilled this gap before the move to the upside. We've got a very strong uptrend currently in the Russell 2000. And similarly for the SPX, having fallen below this neckline, that was a fading move below that neckline, and we've recaptured that, and we've had a massive run to the upside. So we've had this correction, and we're actually consolidating at the moment on this previous neckline. And with the dollar expected to go down, we can expect a move to the upside here. And with the 10-year bonds on a slide, we can expect, after this little bounce here, for the trajectory to continue to the downside. And onto the 60-day cycle, we are currently on day 35 of the current cycle, which ends around about the 9th of February. So what we've done so far is we've consolidated from the start of that cycle and moved slightly higher. Before the midpoint, we came to this high here at around about the 47,900 mark. Then after the decision by the SEC, we've made a higher high here. So we've now got a right translated cycle. And having made a right translated cycle, although it's possible, but it is rare for this to become a failed cycle. And the point at which this will become a failed cycle is if we break the low of the beginning of the cycle here at 40,100. So if we go below here, this becomes a failed cycle, which is very rare in a bull market. Entirely possible, but the higher probability would be, based on the 60-day cycle, would be for a bounce at these levels. And if we extend this red support line, you can see that it's right on the 40,000 support line here. We could quite easily get a sell-off down to the 40,000, even a wick below it, before recapturing it. But once we do lose this 40,000 and we get a failed cycle here, then we really have to brace ourselves for a deeper run into the 60-day cycle low here, because we've got plenty of time in that cycle to come much lower. But if you base it purely on the 60-day cycle here, this looks pretty normal, because what we've done is we've gone from the start of the cycle, we've made our highs, made our higher highs, created the right translated cycle, and we're coming into the midpoint of the cycle on a low, just like we would on a end of the 60-day cycle, just like over here, and over here, and over here. Time and time again, these cycles prove very accurate. So purely on the cycle's point of view, this is quite normal to come into the midpoint of the cycle. Maybe not as far as this has come, but there's a reasonable chance still to go to higher levels and go above the 49, 50,000. But there's nothing untoward going on in the 60-day cycle until we break the 40,000 mark. So this is really the critical level on virtually any chart. So we've had a look at the 4-year cycle, we've had a look at the 60-day cycle, we've had a look at the effects of the ETF on the Bitcoin price. I'm just going to bring the Bitcoin miners into play here, because something very interesting in that the price having topped out at 49,000, so far to the bottom of that trend, we've come down about 15%. So while Bitcoin was making higher highs over here, since the bottom here at the end of December, the Bitcoin miners, as represented by Marathon here, since the 27th of December where they topped out, they have been in a bit of a free fall down here. And so far, just like Marathon, which has fallen down by around about 40%, the majority, if not all of them, have come down by at least that amount. So what the miners have been doing is to front run the Bitcoin price. So just on Thursday, the day after the ETF decision, most of the miners fell by around about the 20 to 25%. And that is the type of volatility you will get from the Bitcoin miners, because they're a leverage play both on the upside as well as on the downside. So while Bitcoin's come down by 15%, most of the miners have come down by 40%. And the effect of that on our swing trades, and I know many people here are interested in our swing trades with the Bitcoin miners, unfortunately because of the ETF story, as well as the expected volatility that you would get with such a major decision, our stop losses had to reflect that in terms of having them a little bit looser than we normally would. So normally we would have much tighter stop losses to mitigate the risk to the downside, but because we kept our stop losses a little bit more looser, i.e. at much lower levels, we've ended up with the first meaningful losses since March last year. So this time around, this was our part 2 of the round 5 swing trades, and we had to close them on Friday at minus 22%, minus 15, minus 13, and minus 22. If you look at the part ones, you can see that we had plus 28%, 27, 33, 12, and 23. So we did reasonably well on the first part of those trades. And we expected, with the ETF decision and the expected rise in the Bitcoin price, to actually carry the Bitcoin miners further up. But as we've seen, it turned out to be, in the short term anyway, a sell the news event. So the gains that we made over here were actually mitigated by some of the losses in the second part of this trade. What it does show is that despite making very good gains over the last 9 or 10 months, like in the round 4 swing trades, we got 7.5%, 33%, minus 5%, 57%, and 8%. In round 3, we got stopped out, but in round 2, we got very good gains here. And in round 1, we got excellent gains over here as well. Overall, we've got something like a 75% success rate so far. And we've still got 2 years of swing trades to do if the bull market runs up to the end of 2025. In case you're wondering what we cover in the private member section, obviously we cover the Bitcoin analysis, which is what the Bitcoin miners are actually mining, to have a look at what the Bitcoin price is doing and how that's going to obviously affect the Bitcoin miners. But we also cover the 60-day cycles in order to time the swing trades that we've been doing over the last 9 months. But more importantly than that, we are tracking the long-term portfolio that we started back in January 2023. And finally, I also take members' requests for any chart that they want me to analyze. And the long-term portfolio we've got runs actually to the end of the bull market. So we started this portfolio back in January 2023 with a capital of around $110,000. And our target was $1 million either by the end of 2023 or by the halving. So we've still got a little bit to go. We went from 110,000 to 434,000 during the course of 2023. We picked these miners, which are now slightly different down here, and the allocations are now slightly different down here. And our current target has now moved from 1 million to actually 5 million for the end of the bull market. And if we were to achieve that, then that would be a 45x from the start that we had at the beginning of 2023. And if you want to be part of that 2-year journey, which we're expecting until the end of 2025, and you want to monitor that portfolio with us and grow with us with that portfolio, then all you have to do is then click the join button here, and for the price of a coffee per week, you can have access to all the previous trades, all the future swing trades if that's something that floats your boat. But more importantly, follow the long-term portfolio that we've got, which is a leverage play. And most of that leverage play won't really trigger off until after the halving. So you really will be at the beginning of the massive move that we're expecting over the next 12 to 24 months. And what I'm really talking about is if you look at the marathon chart, after the halving here, you can see the big massive trajectory of the price going all the way to its all-time high in November 2021, when it topped out exactly at the same time as Bitcoin. So we are currently in this region just before the halving, and we're expecting this to play out, and only time will tell if that happens. But that is the great opportunity that awaits those people who've got a 2-year view and the cycles play out the way we expect them to. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.